Hello everyone. Embrace the iExamB learning experience and prepare 50% faster for various government job exams. In continuation of my last video where I was discussing the past year papers of Commerce and Accountancy of SEBI Grade A exam, in this video I'll continue and finish the questions related to 2020. So if we remember, in 2022, around 9 questions had come from Commerce and Accountancy in phase 1 and around 10 questions in phase 2. Similarly, in 2020, around 8 questions were there of conceptual nature in 2020 phase 1, and in phase 2 there were around 7 questions consisting of 4 numericals. If you've missed the part 1, you can watch the video on the channel. You will find the link in the description. If you've missed other videos related to preparation like the eligibility, the exam pattern, the syllabus, and what is the importance of different subjects mentioned in paper 2 of general stream, you can watch my other videos related to this. Again, you'll find a link in the description box. And if you are looking for past year questions from other subjects of this paper like economics, Companies Act, management, finance, then similar videos are also available on our YouTube channel. You can also attempt the test at iexamb.com under the previous year section. Yeah. Right? So let's move on to discuss the past year questions for Commerce and Accountancy, and this I will mostly be covering the 2020 questions. The 2020 questions were very conceptual in nature, especially in phase 1. They were very easy level accounts that they had asked. In this video today, I will first start with the numericals that came in the phase 2 of 2020. So let's look at the first numerical. The question was, what will be the cost of the machine as per the accounting standards if machine cost is 15 lakh, freight cost is 25,000, testing cost is 18,000, installation cost is 40,000. So if you recall, as per the accounting standards, the one has to take into account all the costs that are associated with the purchase of the machine and any cost that is required to bring that machine, install it and make it operational at the place of operations, right? So as such, machine cost, this is the purchase price, will be included. So we will add 15 lakh here, right? Then freight cost. Now freight cost is again incurred to bring that machine to the place of operation, so it will be added. There is testing cost. Now testing cost is done at the first time, and we are assuming that this machine is being bought and being tested for it to start running. Therefore, this is the initial cost testing which is being done to make the machine operational and therefore would be included. Any testing cost done subsequently later on in any of the years would be part of the repairs and maintenance unless it is a part of an overhauling cost as a second-hand machinery. So we have to understand the nature. As the rule, as I stated, is it should be any cost incurred to bring the machinery, install it and make it operational at the place of the operations for the first time. That's why this is included, and of course the installation cost will also be included here. So we are adding all of these cost, and therefore our correct answer is E, 15.83 lakhs. So only a simple understanding, the confusion only must have come from this point. Otherwise the question was very straightforward. Second question, 10% debentures of value rupees 160 were issued at a premium of 25%. If the total value, book value is 4 lakh, then how much would have been credited to the debenture account? Now this requires the understanding that when any security, here they have taken the example of debentures, are issued, then there is one is the face value and then there is the security premium. Right, this is there, and these two add up to make the entire book value of the security, right? So we know that, say for example, this is 100, this is 25, right, and the book value is 4 lakh. Now this is a percentage, right? So if this is 1, this is 25% has been given to us, and we know that this is 160. Okay, so we have to calculate that. However, this is not really required. If you see, this is 125% is leading to 4 lakh. So if you simply divide 4 lakh by 125% or 1.25, you will get your answer of how much is credited to the debenture account. Debenture account is always credited with the face value. Share premium is the excess that is over and above, right? So share premium will be the 25% and this will be the 100% face value. So 4 lakh divided by 125% would give you 3,20,000, which is what your answer will be here. Next question, what will be the total asset turnover ratio if total assets are rupees 90 lakh and ROA is 98% and your net profit ratio is 5%. Now we know net total asset turnover ratio is actually equal to your sales or turnover divided by your total assets. Right? So here we know what our total assets are, which is 90 lakh. We need to find our sales. Right? Now to calculate the sales, we have been given two other information. One is ROA, return on assets, right? And return relates to profit. And we have also been given the net profit ratio, which is a formula of net profit divided by sales. Right, so this will help me find the sales that I need over here. So return on assets, I already know what my 90 lakh is my assets and the return is 9%. So very easily I know what my net profit is. My net profit is 9% of 90 lakh, right, which is 8.1 lakh. Now I know my profit, net profit, I know what that percentage is. Right, so 5% is equal to my 8.1 lakh divided by sales. Right, as such I can find my sales from this formula, which will be approximately 162 lakh. Okay, now I know my sales and I know my total assets, so I just have to fit in these sales over here. 162 divided by 90, which gives me 1.8. That is how we find. So the trick in any of these ratios question is, first, whatever you have to find, write down that formula and then look at how you can arrive at the missing information. That is how we go about solving the ratios questions which are presented in a layered manner or which have 2 or 3 parts related to it. Let's move ahead. Next question, this is the last question of numericals that had come in 2020, phase 2. We were supposed to calculate the gains or the loss due to forex in 2012 and 13. So the financial year in which we have to calculate has been given for goods purchased worth 1 lakh USD. Right, and we have been given the dates of the different dates on which the exchanges happen and what was the exchange rate, right? So the purchase had happened on 24th March 2011 when the exchange rate was 46.6. At the end of the financial year, 31st March 2011, the exchange rate was 47. And when I made this payment for the goods purchased of 1 lakh USD, on that the date was 5 June 2012 when the exchange rate was 47.5. Now because we have to calculate for one particular financial year, it is very, very important we understand where these dates are falling. So the purchase happened on 24th March 11, which means the financial year was 2010-11. Okay, and then in the end of that financial year, which is again related to 2010-11, and then when I made the payment in June 12, which was the financial year 12-13, and this is where I have to relate to this particular purchase. So if you can see, the information of financial year 11-12 has not been given to us, so we will assume that it was ended on the same exchange rate over here. And if you remember, at the end of the year, the exchange gain or loss is booked as per the exchange rate on that particular last year, whichever is earlier, either the end of the year or when the account is settled. So here we know that the account was not settled on 10/11 when the transaction took place, and not even on 11/12 when one another year had lapsed. As such, the exchange rate for starting of 12/13 is 47, and when the payment was done, it has moved to 47.5. An increase in the exchange rate is a loss. Why? Because we have purchased, we have to make the payment, so we have to make a higher payment. So there is a loss of 0.5 rupees for per USD while making the payment in 12/13 year. And we had made a payment on $1 lakh, so we will multiply this with $1 lakh, which will give us a loss of 50,000, right? So the answer is 50,000 loss, not gain, right? Because an increase is actually known as a depreciation of the currency, which makes our payment higher. But if I was exporting, if I was selling, then it would have been a gain for me. Next, move to the other questions that came in phase 2 of 2020. This was a conceptual question related to where you will present a certain item. So long-term borrowings maturing in the current year are shown in the balance sheet under which of the heads? The correct answer here is A, the current liabilities. Within the current liabilities, they are shown as short-term borrowings. They initially used to be shown as other current liabilities, but the long-term maturity part of the long-term borrowings have been now classified as short-term borrowings under current liabilities as per the Schedule 3 under the Companies Act. Next question, which of the following is not an operating cash flow, right? So there are various operating. We have three types of cash flows. There is operating, there is investing cash flows, and then there are financing cash flows. So we had to identify which one is not an operating cash flow, right? So proceeds from sales of goods and services is an operating cash flow. Proceeds from receipt of fee and commission is also an operating cash flow. Payment of salary is also related to the operations and therefore is an operating cash flow. Payment of dividend, if we are paying dividend to our shareholders, if it is a operating cash flow or not, or if all of them are operating cash flow. Actually, payment to dividend is not a operating cash flow. It is a part of the financing cash flows. Why? Because we have raised capital in the form of equity, which is a financing activity, and any payment done in relation to the financing will also be considered a part of the financing activity. As such, payment of dividends is a financing activity. So here the correct answer is D. Next question, profit on forfeiture of shares after reissue of such forfeited shares is transferred to which of the accounts? So we have various reserves that are created under the reserves and surplus account of the capital side of the balance sheet, right? And they may be prepared for various purposes. There could be a general reserve, a capital reserve, a securities premium reserve, capital redemption reserve, and statutory reserve. General reserve is for any general operations activity for which the company can create a reserve and can use it for any general purpose in the company. Capital reserve is for capital purposes that are created out of capital gains of the company. Securities premium is when companies issue new securities and they are raised at a premium. So we just discussed in the debentures numerical question. So when you are raising money, any premium charge, it goes to the securities premium reserve. Capital redemption reserve is created when the company is buying back shares and for redemption purposes, and statutory reserve as per statutory requirement. So these can be various kind of reserves. There can be other reserves also. Here the profit that is being earned on forfeiture of shares. So you have forfeited shares and then you have reissued them and made a profit on them. So this is not a generic profit. It is a profit made out of capital gains, and therefore it will be a part of your capital reserves. With such discussion, I hope you are understanding the concepts and getting a clarity on how to go ahead in solving the questions, and that is our aim at iExamB, where we help you unfold your potential to prepare holistically and in a very, very crisp, targeted manner for your 50% faster preparation. So let's continue to discuss the questions that came in phase 1. As I stated earlier, phase 1 questions were very, very simple and direct from the account section and very conceptual in nature. The first question that came in phase 1 was asking the accounting rules: debit what comes in and credit what goes out is the correct answer. In the comment section, can you tell me this rule applies to which type of accounts? Right, so there are 3 types of accounts, right, and the 3 types of accounts we classify, and according to that we have the entry rules. So this relates to which type of account, and you can also mention the accounting rule for the other two types of accounts. This is the traditional way of making accounting entries. If you are from the finance background, you will know these. If not, now we also go with the modern technique of making accounting entries, which is very, very acceptable, where we understand assets, liabilities, income, expenses and capital, and these increase and decrease is used to make the entry, what will be debited and what will be credited. So these are the 2 ways. This is related to the traditional accounting method. Moving to the next question, provision of tax comes under which subhead? So we see there was another question related to presentation of financial statements. We have seen in the part 1 also there were a lot of questions related to presentation of financial statements, and that's a very, very important topic. You should know where which item is to be placed, right? So provision of taxes is our current liabilities. Okay, next question, interest on debenture is charged again. So interest on debenture is a compulsory expense that is to be charged against the profit. So it is a part of the profit and loss account of the company. Municipal tax is recorded as per what? All the accounting entries are made as per the accrual basis. So here it was a straightforward question. We do it as per accrual basis and all. Tally software is used for which purpose in India? Now Tally is one of the most followed accounting software for making entries, most widely used. More ERPs are coming in now, but Tally continues to be having the largest market share when it comes to the accounting function and making the accounting entries. So it's an accounting software. 13th question, rent for 11 months is paid and recorded in general, but rent for 12th month is outstanding and it is not recorded in general. Which type of an accounting error has been made over here, right? So if you have forgotten to make the entry, it is an error of omission. There can be other errors like commission error, error of commission, or the error of principal. The error of commission is, say for example, you make a wrong amount, say the rent was 1000 and instead you made an entry of 1100. Right, so that is an error of commission, that by mistake you typed 1 instead of 0, or you typed 100, so that is an error of commission where the amounts has been made, there has been an error on at least one side. So there is a double book entry happening on one side if you made that error. Error of omission is where total omission has happened, you have forgotten to make the entry. And the error of principal is where you make a mistake in recording it incorrectly as a debit or a credit item, right? So that is the 3 types of, majorly these are the 3 types of errors that can be there. There is another error known as the compensating error. Maybe you can write in the comments box what we do mean by compensating error. 14th question, when there is no partnership deed. So in 2020 phase 1, that was the first time this syllabus was introduced, and there were certain questions that were not directly from the syllabus stated but related items. Such repetition has not happened after that, either in 2020 phase 2 or in 2022. So even after looking at this, my advice is first first, very important it is for you to cover your syllabus and only then move to peripheral items. In iExam B SEBI Grade A General course, we do include such topics which you can do in addition to make your preparation even more holistic, but that should always come after first completing your syllabus topics. So in the partnership deed, there were actually two questions that came related to partnership. One was, how is the profit distributed if there is no partnership deed? So if there is no partnership deed, the profits are distributed equally. Otherwise, whatever is stated in the partnership deed, in that percentage the profit distribution happens. The other question again related to the partners was, if the partners have a current account of the partners are opened, when there is a capital account, that is of what nature, right? So capital and current accounts of partners actually represents the capital that each of the partner has. So if there is a current account, that means any kind of profits coming from the year or any other kind of payment that is being done to the partner relates to a particular year is being accounted for in the current account. So the initial capital that the partner has brought in, that is reflected in the capital account. So that will be fixed in nature because it is not changing with every year, and any adjustments year on year in the form of profits being shared or any drawing that the withdrawal that the partner has made will be adjusted in the current account. So therefore the capital accounts remains fixed. So these were the questions that came in 2020. With this part 2, I have covered all the questions that have come in phase in 2022 and in 2020 related to commerce and accountancy. I hope this will help you to understand the importance of topics. I have also stated the topics that are recurring and are very important to be done in 2 of my videos. One related to the importance of each of the subjects in paper 2, and the second video which was the part 1 of this particular video. Please do go through it if you have not already done. If you have not subscribed to the channel, please subscribe to the channel so that you get the alerts of these such videos on time. Thank you so much. Wishing you all the best for your preparation.